Welcome to the sixth episode of Talks with Daulat. My name is Akshita Maheshwari, and I am the content and growth lead here at Daulat. Today we have with us the founder and CEO of Daulat, Varun Fatehpuria. Before Daulat, Varun worked with some of the biggest investment firms in the world like Bloomberg and Blackstone. He graduated with distinction in finance and information system from the Hong Kong University of Science and Technology. He is also a NSIM certified investment advisor. We are glad to have you here with us, Varun.
Thank you so much for having me once again, Akshita.
Yeah. Daulat is a tech enabled, all in one platform that provides customized portfolios to people so that they can reach their financial goals. Today, we are here to discuss another interesting topic about finance, which is investing in gold. We've seen that Indians love gold. Whether it is a festival or it is a marriage, the first thing that we talk about is buying gold. So, Varun, could you tell us why is there this love for gold, especially amongst Indians?
Yeah, so India's love for gold is actually rooted in tradition, right? So the significance and importance of buying and holding gold goes back to the early medieval days. So it is no surprise that we have continued to hold on to that tradition of buying gold whenever we see an opportunity. So just to give some numbers to our audience today to elaborate how much we love gold, right? So Indian households, Indian families collectively today hold over 23,000 tons of gold. That's equivalent to approximately 1 crore or $1.4 trillion. I mean, it is such a big number. It is really difficult to fathom how much we actually love gold if we translate that into hard rupee value. And we also actually hold approximately 11% of the world's reserve. It is not that we have started to reduce our love for gold over the past few years, if that was a way. In fact, if anything, the demand for gold continues to rise year on year. Today, Indians collectively demand approximately 840 tons of gold every year. And actually, most of that demand comes from rural India, where people still do not have access to a bank account, or think of gold as a security, something that can be liquidated just as easily as cash lying in their bank account. They really think of gold as an insurance mechanism, something which will come good to them when things go bad. So that's how much Indians love gold. And we really do not think that is going to die down anytime soon.
Wow, I mean, those figures are really fascinating and truly surprising also. So, could you, maybe give us some reasons why Indians like to have gold in their portfolio so much?
So Indians primarily have gold in their portfolio as a consumption asset and not so much as an investment or a financial asset. And there are two key reasons why Indians have gold in their portfolio inadvertently. I think it's mostly by happenstance and not by design. Number one, gold has a very strong religious connotation. Whether you attend any festival, go to weddings, parties, it is by happenstance that people inadvertently end up accumulating a lot of gold for these events in their life. And it plays a really important part in the social and the cultural fabric of the country. So that's number one, a very strong religious and a social connotation. So, in fact, over 50% of the demand for gold actually comes from weddings. And it is no surprise that Indian weddings are a huge affair, and that is where a lot of the demand for gold actually also comes from. And number two, why Indians typically also love gold is because it is really used as a family heirloom, as a way to pass on legacy from one generation to another. If you have parents, grandparents in your home, you will typically see them holding a lot of gold and then passing on to you from time to time as a way of passing on their legacy to your generation and a generation below yours. So those are the two key reasons why Indians inadvertently end up holding a lot of gold in their portfolios.
Yeah, I mean, I can truly relate to this. My grandmother often gives, gold coins as a sign of her blessings. So this is something that is definitely prevalent in Indian families. Varun, could you maybe talk about gold in terms of an asset class a little more?
So gold as an asset class is something that is not just relevant to the Indian families domestically, but it is also very important as an asset class internationally. And there are three key reasons why gold as an asset class has continued to hold its value over centuries, right? Number one, it is a great portfolio diversifier. And by that, I mean that it is very lowly correlated to other traditional asset classes like stocks and bonds. So when you see a downturn in those two asset classes, people typically tend to flock to gold as a way to protect their value. So it is a great portfolio diversifier. And if you're thinking of diversifying your portfolio, you should definitely consider having gold as an asset class, at least some percentage of allocation to it. Number two, it is a safe haven asset. What we saw in 2022 with the Russian invasion of Ukraine, in times of extreme uncertainty, in times of extreme volatility, people flock to this yellow metal because this is something they know will hold its value over a longer period of time. And number three, it is highly liquid and provides a store of value. Just how liquid cash lying in your bank account is, today you can easily liquidate gold in a matter of hours, if not less. So these are the three key reasons why having a certain percentage allocation to gold as an asset class is really helpful at a portfolio level.
Okay. So maybe you can tell us more about what are the different ways in which we can invest in gold.
So today in India, Akshita, there are five key ways of investing in gold, right? Number one, and something which we are most familiar with, is buying physical jewelry or gold bar. Like you walk into a jeweler's showroom, and either you buy physical gold bars or you convert that gold bar into a jewelry that you can easily wear into weddings and events and all of those things. One thing to keep in mind, which a lot of people tend to overlook, is just the amount of taxation that is applied to buying physical gold over and above the price of gold, right? So just to give some example, there is a 10% import duty. Over and above that, there is an approximately 5% cess which the government of India charges. And then there is a 3% flat GST. So just from a tax perspective, you are paying 18% taxation to purchase that physical gold. And this does not include any of the making charges, which is can come in anywhere between 8 to 20-25% depending on the kind of make that you have when you're buying these physical things. People tend to buy physical gold, people tend to buy jewelry not more from an investment perspective, but more from a consumption, something that can be worn and shown to people. So that's number one, physical jewelry and gold bar. Number two is digital gold. This is something that has been gaining traction in the country over the last 5 to 7 years, especially after the coming of the new age investment platforms, which have provided a lot of youngsters, millennials, as a way to access gold by fractionalizing it. By that, I mean you no longer need to buy 5 gram, 10 gram, 15 grams of gold, go to a jeweler and purchase it physically. Just by sitting at your home, tapping a few buttons, and having as low as 500 or 1,000 rupees, you can buy a certain fraction of gold for that amount. Something to again keep in mind over here is that you should be mindful of the buying and the selling commission that you pay to these platforms every time you make a buy or a sell decision. That's number two, digital gold. Number three are ETFs or exchange traded funds. Similar to how you would invest in a stock ETF or a bond ETF, which effectively hold a collection of underlying stocks and bonds, gold ETFs also function in a similar manner, the only difference here being that the gold ETF invests in physical gold. So if you're buying one unit of ETF on a stock exchange, similar to any of the stocks that you would buy otherwise, each of the unit is represented by 1 gram of physical gold. And naturally, so the price would be equivalent to the existing price of gold at that point in time. The thing again to be mindful of over here is that when you go and sell this one unit, you will not receive physical gold in return. You will receive the equivalent value of the gold at that point in time. So that's number three, gold ETFs. Number four are gold mutual funds. Again, these function in a very similar manner to gold ETFs. The difference here being that the gold mutual funds in turn further invest in gold ETFs. So these are primarily for investors who do not have a demat account. And number two, it gives you an easy way of participating in gold through SIPs, which is something that you cannot do very easily through ETFs. That is something that you should definitely consider. if you do not want to have the hassle of buying digital gold or buying gold ETFs. And number five are sovereign gold bonds or SGBs. This is again a relatively newer concept, but this is something which is issued by the RBI on behalf of the government of India. So there is an implicit sovereign guarantee when you are buying sovereign gold bonds. What are sovereign gold bonds are essentially when you're buying one unit of an SGB. Again, similar to a gold ETF, it represents 1 gram of gold, right? One of the most interesting aspect of an SGB is that it pays you, or the government pays you 2.5% interest every year on the amount that you invest, irrespective of the appreciation or the depreciation in the price of gold. And if you hold these bonds through their maturity period of approximately 8 years, then you're also exempt from paying any capital gains tax, right? Capital gains tax is really just the difference between the buying and the selling price. So if you are able to see through the investment for a period of 8 years, you no longer have to pay any of the taxes. So these are the five ways of investing in gold in India, and the latter four are more of a way of investing as a financial asset as compared to a physical jewelry or a gold bar, which is typically used for consumption.
Got it. Actually, a lot of these options were new to me also. I mean, and I got a lot of clarity in about investment in gold. So since now we've understood that it's important to have a percentage allocation of gold in your portfolio for diversification purposes, could you maybe tell how much that percentage should be?
So again, we have seen typically if you're able to allocate anywhere between 5 to 7% of your overall portfolio to gold, it acts as a great diversifier, and it also protects your portfolio from extreme volatility and downturn in the stock and the bond markets. This is something that we had seen in the last 12 to 15 months with the invasion. And so having an allocation anywhere between 5 to 7% is a good enough allocation. I would not really recommend 15, 20, 25% because it is not a very good wealth creation opportunity. This is primarily used as a hedge and a diversifier.
Understood. Varun, is there anything else that you would like us to know about gold and investment in gold?
I think gold as an investment asset, as an asset class, definitely is not dying anytime soon. I think people have started to realize the importance of gold as an asset class in their investment portfolios and not just something that can be worn. So definitely do think of the newer ways of investing in gold, which is definitely a lot more efficient. When you're buying physical jewelry, gold bar, you also have to think about the higher taxation, the higher storage cost, and the risk associated with the security of it. And the newer ways of investing in gold are much more efficient. So these are some of the points that you should keep in mind when you are thinking about investing in gold as an asset class, as a financial asset.
All right. Thank you so much, Varun. I definitely had a great time doing this interview with you, and I hope so did our audience. I'll see you again next week.
Thank you, Akshita.